5 simple ways to reduce your taxes. What we're talking about today in the East Central Business Show. I'm John Naylor, joined by Robert King from Xperion Accountants. Good morning, Robert.
It's good to be here once again, John.
Oh, it's been a while, Robert.
Has been
You've
a while.
Been holding out on me.
30th of June kicks around. You don't see us for a while before 30th of June.
Yeah, I've come to appreciate that. I'll get in earlier next year. But anyway, look, so we're talking today about 5 simple ways to reduce your tax.
Yep.
There's probably more than that, yeah?
Oh, look, there's multitudes, but today I wanted to try and keep it as simple as possible. We'll keep it to 5. We could go on longer, but I know we're on a time restriction.
Yeah.
People get bored watching videos, so we'll keep it down to 5 for today.
I'll try and keep it interesting for it, Robert. Don't give yourself too much like credit. I mean, you after all, you are a boring accountant, you know, as you
Self-confessed, absolutely. I've always said that all accountants are boring. It's just the level that varies. So.
Okay. Well, anyway, what's in the box?
All right.
Hit me with something.
Look, nice and simple to start with. Simply keeping receipts. Sounds simple, but it's amazing how many people get to the 30th of June or after the 30th of June, come into our office and they've just forgotten to keep receipts during the year. So we try and tell clients wherever possible, just make sure you hold on to those receipts. Put them in a safe place. Days of technology now, there's a whole lot of apps you can download onto your phone. Take pictures of them if you need to. Business owners, for example, we use Receipt Bank for a lot of our business owners.
Yeah, you're a big fan. Saw that recently at a seminar, the way that integrates back to Xero, your preferred accounting platform.
Yep, and
beautiful.
We use both Receipt Bank and Xero ourselves for business. It's a fantastic app, and there's apps for individuals as well as businesses. Have a look, see what suits you, snap your receipts so that when it comes to do your taxes, you just say, there you go, it's all done. You're not scrambling to find receipts that are sort of 12 months old and faded in your glove box somewhere. So.
Now, dumbing that down even further, is it even valid for them to just have a happy snap of every receipt?
Yeah, absolutely.
Is that satisfactory these days?
Yep, absolutely. And it's probably even better because, as I said, a lot of receipts fade nowadays. So if you've got those old receipts, you're supposed to keep receipts, depending on if you're an individual or a business, at least 2 years. 2 years' time, petrol receipts have faded. So you best take a snapshot, it's there forever, download it on your computer, happy days.
Okay, all right, so image them and that's enough to
Absolutely.
start with, but otherwise use some sort of interactive thing. Okay.
Yeah,
right.
and there's lots of apps out there.
And obviously, if you keep receipts, that's going to give you ways and means to reduce your tax. Because your costs are going to be all there listed.
Yep.
Big fan myself.
Look, I can't stress enough how many individual clients in particular walk through our door and just say, I've got no receipts, even though you know they should have. So, and you can only claim a certain amount over which they need receipts. So easy.
Okay, and then what the process around that is like even mining their bank account for like data around what they've spent, and then trying to prove it, I guess, is in the...
Well,
because that's not enough, is it?
It's not enough because and a lot of people try and rely on that. They say, well, it's on my credit card statement. And you say, well, okay, a prime example is Officeworks. I've got Officeworks on my credit card. That's deductible. It's like, well, what did you buy? So, well, I don't know. So how does the tax office know what you've bought to determine whether it's deductible?
Yeah.
It probably is, but the tax office isn't going to accept probably.
Okay.
So.
Drama. Okay, all right. Receipts, we've done that. What else you got?
Look, I harp on it all the time. Super. Okay. It is one of the best ways to reduce your tax. And if you're young and you're saving for a home, you don't want to think about super. But I can't stress enough how important it is to start putting money away for your retirement, and the earlier, the better. We've got lots of business owners that wait, and they'll say, I'll do it next year, I'll do it next year. They get to retirement and they just don't have enough to retire on. So
touch of the nerve there, Rob, a bit as a sole trader.
Make it a habit.
I love that fact that we can defer.
No.
Super responsible. You say it's like no, it's just prudent.
Look, I say make it a habit, but make it a priority. Okay? You've been told.
Noted. Back of the class. Okay, now what else you got then?
Just trying to think. Well, typically, like a lot of our clients are business owners. So a lot of the work we do with them revolves around their structure. So typically they might walk through our door as a sole trader, but once they start earning some fairly good money, we've got to have that conversation with them about, is a company more suitable for what they need, or maybe even a trust, or a combination of a company and trust as well. So it's important for businesses in particular to make sure they've got the right structure for their circumstances, and that can change from time to time. This year it might be a sole trader, Next year it might be a company. So it's having that conversation with your accountant each year to see if your current structure is right for your circumstances. So
we've had that conversation. I sort of feel like I'm on the cusp. I think this might be the year, Rob.
Well, we just need to look at your numbers and then we can work it out.
Okay, yeah, fantastic. But then people then talk about trusts and companies and structures to then, build property portfolios. And I think that's on your list here as well, yeah?
Yeah, look, property is a great way to grow your wealth. But when it comes to saving tax, you've got to make sure you buy the right property. So when I talk about the right property, I'll talk about properties that have really good depreciation in them, and quite often that means new properties. Tax Office changed the laws recently. When we talk about depreciation, there's two types. There's the depreciations of the walls, pretty much, and there's the depreciation of everything inside the walls. So a new property, you can claim both of those things.
Yes.
But recent rule changes mean if you buy an existing property, you can only claim one of those things.
Oh, okay.
So it's important you get the right property if we're talking about reducing your tax, and that means a new property.
Okay.
But
that's notable because we all to think about buying something, renovating, or block split and that sort of thing, but that's not necessarily going to play out too well from a depreciation point of view. It's got to work in another way.
Well, if you're building a property, then you still get that depreciation, the full depreciation. It's if you buy something second-hand. But I suppose the overriding issue of all that is saving tax is fine, but make sure it's the right property. We've got numerous examples where clients go and buy a new property well outside the CBD, and I won't name any areas in particular, but they're properties that are low cost, and they're probably not going to give you good growth, and quite often they're not going to give you good tenants as well. So you've got to get some good advice around that. We work really closely with a couple of property experts that will not only source the property for you, but help you manage it as well once you've actually found it. But again, from purely a tax point of view, new properties give you the best depreciation to reduce your tax.
Yeah, no, and I hear you about that sort of city fringe type stuff. I've recently been schooling myself around that topic, and it's been some insight. And you say, and they say in 10 years' time, you go, well, no, I need a result a little bit sooner than that. So that's when you start to
And again,
the city,
different people have. Quite often clients ask me, say, well, what's right for me? So, well, what's right for one person, be it save tax, is totally different for another person who might be a builder or an architect and want to split a block and do all those things. But purely from a tax point of view, depreciation is the way to go.
Oh, fabulous. And that sort of goes into the one you've got fifth on the list. There's about mortgage offset.
Yeah.
That's a new one for me. Hit us up.
Yeah, well, there's two sides of the mortgage offset, I suppose. And I know you've got another expert, Laura, comes in and talks about mortgages a lot. A good finance broker will always set you up with a mortgage offset, because they're a great way not only to save you tax, but to save you interest. If you've got a whole stack of money sitting in a bank account, you really should have that in a mortgage offset account, so it's reducing the interest on another loan. So not only will it reduce your interest, but you're not earning interest in that other account and not paying tax on that interest.
I get it, yep.
So it's sort of a double whammy. You're saving on the interest, plus you're saving on tax as well. And by having that money in that mortgage offset, it's a great way to bring your loan down really quickly as well. So it's important that you structure it correctly. And again, talking to experts that know how to structure mortgages and that sort of thing properly.
Yeah, well, of course, as a sole trader, you probably park your BAS provision in your mortgage offset, and happy to have it parked there for the best part of a month until it's due, yeah?
Yep, absolutely. Sole traders can definitely do that. They can throw all the money in their offset account and leave it there quite happily. Companies are a little bit different because there's some rules around being able to take money out. So if you've got a property in your own name, it's a little bit harder to park it against your offset account, and you need to be pretty careful on how you do that.
Soft trader, there's a little cheeky number of things you can get away with there.
Absolutely.
All completely legal though. Now anyway, let's get on with it. Now, how do people get in contact with Xperion for some of this more this expert advice around saving tax?
Yeah, absolutely. Today we've just talked about 5 ways to save tax. If you go to our website, we've actually got 30 ways.
Right.
When I say 30 ways, we put 30 simple ways because we can just touch on them simply. But if you really need to know in detail, then you need to come and talk to us about how it actually suits your circumstances. So jump onto our website, you'll see that on there, xperion.com.au.